Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, Northstar Commodity. We had a mostly lower day on Monday, except for the wheat complex. And Mark, first of all, let's talk about, the elephant in the room, and that's certainly that Middle East conflict. What are some of the long-term impacts you think it might have on the ag sector?
Well, I think if it just stays between Israel and Hamas, I don't think it has a significant impact. Now, you had a big rally up today in the crude oil and in the energy complex in general, so there's always nervousness. However, and the nervousness gets to be as if it ever spreads and more countries get involved. And I would still say Iran would be the country that you'd want to watch if that gets involved in it. That would then become more bullish to the energy complex, likely be more bearish to the overall equity markets if that were to occur. So that's the one that I think you watch. When you look at how it performed in the markets here today, I would say that it handled it as if though that this is going to be staying between Hamas and Israel.
Yeah. So the wheat market, did we put in a little geopolitical premium there today, or was that just short covering, or what?
I think you might have had a little bit of short covering in here. Geopolitical, yes, you get some of it because it's Middle East and involves some of the movement here where those countries are always looking to buy wheat. But I think you've got some issues yet in the wheat market. Let's keep in mind, it's been beat up pretty good in here. So I think you're going to get some bounces. Now, we still got a ways to go. I mean, I think the Kansas City wheat probably going to run into some tough resistance at about 705, 707 on the December KC wheat. Just things that you got to start watching in there. Our export demand is still very sluggish across the board. It's not just the wheat. The wheat is supposed to be poor numbers, and they're at least living up to being, I think, reachable of the poor numbers that we have. The beans, on the other hand, have had 4 or 5 weeks now that have been well below where we need to be doing and the business that we need to be doing at this time of the year to get a good jump on it. We're some 30% below a year ago on forward sales. So not a good situation for the beans. So a lot of people hoping for something to go higher. I just don't see much on the weather front here that's a problem either, not only here in the U.S., but around the globe. South America, it's just not an issue yet at the present time to create any weather scare for the bean market.
So corn and soybean market setting back here, how much of that was harvest pressure? Was it report positioning, or what was going on there today?
I think a little of both. We were higher overnight for the most part. And then as things seemed to, when we came in and started the day session, things kind of calmed down quickly. The markets went down. We kind of made a charge here at the end to try to get back to the plus side. Couldn't quite do it. I think the harvest pressure will be there. I think the farmers are trying to make good progress. There is rain in the forecast coming up for Wednesday, Thursday, Friday, 2 to 3 inches across the central part of the Midwest. So I think they're going to push it pretty hard and move the product. I think for the most part, farmers aren't going to be very aggressive on selling much of anything, quite frankly, if they unless they have to get rid of it. Otherwise, I think they're just going to put it in the bin and sit on this thing and see what we got. Report wise coming up, I think the thing you have to basically stay away from is don't come in with a crop that gets a little bit bigger. If that's the case, then you set a nasty tone of probably lower prices headed our way.
Although with the quarterly stocks, the way they came out, you would expect maybe a little tighter ending sheet for balance sheet anyways for corn, maybe a little bigger for soybeans.
Yeah, I do. I think the corn could maybe surprises come in just a little bit less on this. The beans, that's like I say, I think there's going to be at least enough data now that they're probably going to lower our export projections when that one comes forward. The wheat, actually, we all looked at the wheat crop getting bigger, but the stocks on the wheat went down, suggesting we got better usage on wheat than we might think too. Mm-hmm.
And let's talk technicals, because the corn market had a higher weekly close last week, but we cannot get above the $5 mark. So that's the first hurdle we have to get over, right?
Yeah, you need to clear we cleared this 492. That was the first one. And then it's going to bounce into resistance at $5 and then 510. And then if we could start clearing right now, I'd like to think it has a chance to go up where I would like to see it go to is about this 520 to 530 area. There's a gap up on the charts. I think that's maybe the target that I'd like to get to, and that's probably where it would have to go, right where you'd start seeing farmers selling. That's the other thing. Keep in mind, if you do get any type of rally, you're likely to see the farmers start moving some of their product back onto the market. But for right now, I think those are the numbers that I'm gauging at right now. If you look at the corn market on a weekly basis and even a daily, it's a long sideways pattern attempting to break out to the upside, just taking longer than we think.
Yeah, it just looks better, though, considering you got a 2.2 billion bushel carryout. You wouldn't think we'd be even able to stay sideways at this point.
Yeah, exactly. I mean, the carryouts are still rather sizable in here and adequate enough. And like I've said before, just not enough of a weather front or problem around the globe that's going to make anybody nervous of going, I need to get this product bought.
Sure.
That's just not there.
Meanwhile, we have had 6 weeks of lower closes in soybeans. How much technical damage have we done? Where do you look for us where we need to hold support?
Well, it's 6 weeks down. I would still say I don't think we really have done any technical damage. It's hard to determine whether or not the beans are trying to create a going on a down, that we had a failure swing and we can't take it out, or whether we're coming down. 1250 is going to be key. If you take out 1250 on the November beans, then I would say like $12 to 1210 is probably going to come into play.
But Mark, the funds have pretty much liquidated all their longs. They might be flat to a little short now. And so won't that take a little sell pressure off?
I hope so. But I better start seeing some uptick in the export business here pretty quick. Otherwise, we're going to run out of time. I mean, otherwise you're going to have Brazil back selling beans into the world market come January, February. And so our window of opportunity to move this product is between us now. And unless you get the problem in South America, that's what you're going to have to deal with. So as much as we'd like to say the funds are, granted, they're back to the about even, but go look at where they are with the corn and the wheat. They were sizable short positions, and that still didn't make the market move up until now on the last couple of weeks. But prior to that, we were driving the market lower, despite the fact that they're already carrying sizable short positions in those two commodities.
Yeah, so we're going low enough in the price to try to stimulate some of that demand we're lacking. Okay, cattle market, let's move over there. Today, was this just a risk-off sell-off, or is this market still in the process of kind of correcting its overbought status?
I think it still feels a little tired to me. The cash has just pretty much been stuck in a price range here of steady, a little bit lower on a weekly basis. I've been doing this for 2 to 3 weeks in a row. Now, when you look at it on a seasonal time period, domestic demand for beef typically starts to improve the mid to late part of October and then goes that way until we get into the middle of December. So I'd like to think that we see something a little bit better on that front, and that we start seeing the demand give you an uptick in here. We need it because if you go back and look at where we were for the month of August, our imports of beef, because of our stronger dollar, imports of beef were 65 million pounds more than it was last year for the month of August. And our exports were 65 million pounds less than what they were last August in here. So that's a net result of we just put more beef into the coolers. Therefore, you better keep this demand domestically holding strong because you don't really have it in the export market.
Well, and that's a function of not only the higher dollar, but just the higher prices, right?
Yeah, it's just a combination. I mean, eventually high prices will slow it down. If you take a look, and even on the spreads, go look at the spreads between the cattle and the hogs. I mean, you hit a December, February, April, so they all hit $120 cattle over hogs. I mean, we're talking about astronomical high levels. So the spread, and eventually you can just top out a market simply because it got too high. And that's the way it feels a little bit here for the cattle for the short term. That just feels tired.
And what about the hog market? The funds on the Commitment of Traders report liquidating more than half of their position in 1 week. Are they done liquidating, do you think?
Well, the one nice thing about the pork is that the futures are trading at a discount to where you are with the cash index, where you are, basically with the cash hogs for the most part when you get to the December hogs. And then also you're trading at a discount on the futures compared to where you are with the pork cutout. Pork is probably the cheapest product of the three meats. I like to think that we pick up some demand there. We had good export sales last week at 43,000 tons. Those were all impressive numbers. Our pork exports have been doing just fine. I don't have a problem with that. We are going to have a large number of pigs that are going to be going to market, live hogs, here over the next 3 to 4 months. So we're not going to get away from that. So therefore, you've got to continue to keep this thing charging. But I do, at least you bounce back. The only problem you have is on a seasonal time period, you're running out. You do head lower as you go into the November, December time period for the hog market.
Okay, thanks for joining us, Mark Schultz, Northstar Commodity. That is Markets Now.